Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 2nd of November. Tonight is the night we broadcast our 1-hour show on the markets, so if you'd like to ask a question, I'll call us in at the number on the screen, 410-867-2100, or you can email us at marketclubtv@ino.com with your questions. The show starts tonight at 5 p.m. and if you have any questions, we'd love to hear from you. So here it is. Greece is on a very slippery slope. There's no doubt in my mind that Greece is going to default. They're just going to revert back to the drachma, which was the currency before they joined the Eurozone. Why do I say that? Well, having grown up in Europe, you have to be somewhat aware of the different nationalities and their cultures, all of which seem to be at odds with each other. I'm sure the German mindset cannot understand the Greek mindset and vice versa. So what is a trader to do? The best thing in my mind is to simply rely on the direction of the charts. 99% of the time they get the direction right. In the last 2 days we've seen a very sharp down move, and so far we have seen a short covering rally today, which may or may not get any further than we are right now. What I see seeping into the market is trading fatigue, as triple-digit swings in both directions are costly and for the most part based solely on news from Europe. So be sure to check our show out tonight. We'll be doing a complete update on today's markets. We'll be covering the major stocks that were involved in today's moves, such as the bank and energy stocks. If you'd like to call any questions, you simply call 410-867-2100, extension 129, and leave a message on the line, and we'll do our best to get the show out tonight. If you can't make the 5 p.m. showtime, we'll be rebroadcasting on demand the show throughout the day. Okay, now let's go to the charts and see how we can create and maintain your wealth in 2011. We'll start off as we normally do with my portfolio, and we're going to start with the S&P 500. As you can see, it's a plus 55, as are many of the markets right now, which indicates a trading range. So let's go to the chart, and you can see these are the sharp moves we saw on the last couple of days, and I think that's really indicative of Monday and Tuesday. Very sharp down moves. This level here, I'm going to put my telestrator on the screen right now to show you this, and we can say right here is definitely a key level to watch. That's right around the 1220 area. The sharp move down, the little move up we've seen today does not change the direction. We have our long-term negative triangles. The monthly are down. The daily is also down. Only the weekly is up right here, and that's up from 1220. Interestingly enough, so this is the key level. I think what we may do is Monday, Tuesday, Wednesday, and we may just pop around a little bit, and then I think by Friday I think we'll start coming under pressure again, because it'll be the weekend and a lot of traders will not want to be going home long this market over the weekend, simply because of what can happen in Europe during that time frame. And these are very, very interesting times. If we're right, we think this market may be just rolling over to the downside, and there's some other indications of that. Let me just take this off the screen for a second, clear the screen up, and go and look at we were overbought. We've gone below that line on the Williams %R, and we're just beginning to roll over here on the MACD. Another couple of lower closes, and this will go below and will put this market in more downside pressure. So watch those levels very carefully. Also watch our intermediate trade triangle. If that turns red, then we're going to be under a lot more pressure in this market. Let's go to our next market, and the next market we're looking at is going to be silver. And spot silver continues to be in a trading range with a plus or a minus 55 in this case. Longer term negative on the monthly. Intermediate green, which means there's conflict here, so a trading range creates a trading range scenario, and you can see the action here. Really not too much going on. It's kind of like you've got $36 an ounce on the upside, 32 on the downside, and it's stuck in that range. It needs to move out of that range to get this market moving either way. And again, not much going on there with either one of those indicators. Next market is gold. Now, gold was the only market that had a plus 85 when we looked at this earlier. It's still plus 85, indicating that the trend is on the upside. However, it is having problems at the 1750 area, as you can see, And if you remember yesterday in our report, we were saying that the 1750 area right here and the 1700 level, very key levels. We said if we close below 1700, we'd see probably a test of this level right around here, about the 1620, 1630 level. But nonetheless, this market is either consolidating to go higher later on, or it's just rolling over. I think for the moment, we want to give this go with our trade triangles, with these up on the monthly, up on the intermediate, and only the daily is negative right now, and that could turn up possibly as early as tomorrow. So let's clear the screen and go to our next market. The next market we're looking at is copper. This is a new market we put in because we felt it was very important economically to see what was going on. You can see the sharp days down. This is reflective of the equity markets, and of course copper is going to be reflective with the economy. If the economy is slow or bad, copper prices are going to come down because demand for copper is not going to be so great. And that's the same with China too. So let's see if see how this works out. But generally speaking, I think we can possibly draw our Fibonacci from the highs here, draw it to the lows, and we could see a move down to the 330, 335 level without too much of a swing from here. But certainly the level we're looking at, which is I think is going to be very important, is the 350 level. If we see a close below that level, possibly on Thursday, Friday, I think we'll see more pressure coming into this market next week. So let's go to our next market. And the next market is crude oil. Again, this is in a market that's been sort of trapped in a trading range. We've outlined this before, and the trading range we're seeing right now is right around the 94, 95 level right here, and right around this zone right here, right around the 90 range. So again, it's a 55 reading. We know the longer term is down, intermediate is up, and short term down. So you've only got one on this side, and you have two on this side. You have these two markets here. So generally speaking, in a trading range, signaling yesterday, 91.36. The market's a little bit higher today. To say that is possibly a top here. I think if we take everything off the screen and go to look at see how this market's going with our other indicators, this is beginning to get very close to rolling over. And the MACD, if you look at this, we're still overbought a little bit. Really no strong direction though, and I think that's what's important here. It's to watch, give this market some room to trade. So let's go to our next market. This is the dollar index. The dollar index had a really nice move up here the last couple of days based on the possible referendum in Greece. We're seeing this a huge change in the markets, and you can see a couple of things here. You can draw our trend lines. You just draw a simple trend line from here to here, here. We broke out on the trend line. This is a pretty important, I think we looked at this, it's a little further than the Fibonacci retracement we expected, but I think generally speaking the longer term is still remains positive, and that's so we're positive here, and we're negative here, and we're positive here. So I think that's the two things to look at, and I think the 78.50 area is definitely an area to shoot for. I think if we just consolidate around these levels just like we did here, then we'll see a little further energy to push this market higher to the 78.50 level and possibly even to the 80 level, which is one of our ultimate targets for this market. But generally speaking, I think if things hit badly in Europe, which seems to be very possible right now, then people are going to come into the dollar. It's just, that is just going to be quite simple. So watch the euro and watch this particular index. It's going to be very, very important. So let's clear the screen and go to our next market. And the next market we're looking at is going to be the Reuters Jeffrey CRB index. Now this index, basically, we mentioned this before, the 325 level, I think was exactly, if I remember this correctly, you'll just put the, I think it was from here, scope this in, right on the money in terms of the Fibonacci retracement. We've pulled back, depending where we close this week, but generally speaking, the move down, this little blip here doesn't look like it's making any changes. I think if we see Thursday and Friday, see this market on the defensive closing lower than this day here, which was the 315 and 19. If we see it closing under 315, I think we'll see a lot more pressure coming into this market. And this is largely reflective of the crude oil market, which plays a big part in this particular index. So, but let's go back to our portfolio. We'll be covering Citigroup, Bank of America, some pro shares, EU, which is the dollar, ultra short, the euro, and there'll be other markets to be covering tonight. So be sure to tune in our show at 5 p.m. We're very excited about it. And if you have a chance, give us a call at 410-867-2100, extension 129, and we'll do our best to get you on the air and get you answers on the air tonight on MarketClub TV. Hey, Adam Hewison for MarketClub. I'll see you tonight at 5. Thanks for tuning in. Every success and have a profitable trading day.